sit down at your screen before the market opens. Your scanner lights up like a Christmas tree. 10 stocks, maybe 15, sometimes 20. Every one of them looks promising. Every chart seems to be telling you the same story. This is the one. But by the end of the day, you discover a painful truth. The problem was never finding stocks. The problem was choosing the right one. Most traders spend their lives searching for better scanners, better indicators, better screeners, better software. They believe their profits are hiding inside some secret stock they have not yet discovered. I learned long ago that fortunes are rarely made by finding more opportunities. Fortunes are made by selecting the best opportunity and then having the courage to act on it. There is a great difference between activity and accomplishment. The public confuses the two every day. A man sees 10 stocks moving and feels compelled to trade all 10. He mistakes motion for opportunity. He mistakes excitement for certainty. He mistakes quantity for quality. And the market punishes him for it. I want you to imagine a fisherman standing beside a river. He casts his line into the water and catches 10 fish. Would he attempt to carry all 10 at once if he knew only one was valuable enough to feed his family? Of course not. Yet traders do exactly this every day. Their scanners present 10 possibilities, and instead of selecting the strongest, they divide their attention among all of them. Their capital becomes scattered, their focus disappears, their conviction evaporates. Then they wonder why their account never grows. The biggest money I ever made did not come from trading many stocks. It came from concentrating on the right stock. That lesson cost me a fortune to learn. There was a period in my career when I believed opportunity existed everywhere. Every breakout looked tradable. Every rumor looked actionable. Every moving stock seemed worthy of my capital. I was busy, very busy, and very foolish, because the market does not reward busyness. It rewards accuracy. The professional does not ask, "How many stocks can I trade today?" He asks, "Which stock deserves my money?" Those are entirely different questions. One morning, your scanner identifies 10 stocks breaking above resistance. At first glance, they appear identical, but they are not. One has institutional sponsorship. One has unusually high volume. One is leading its sector. One is attracting the attention of major operators. One is moving because of genuine demand. The others are merely moving. That distinction is everything. Most traders stop their analysis too early. They find a stock moving and immediately begin imagining profits. Professionals continue investigating. They ask harder questions. Why is it moving? Who is buying? How much volume supports the move? What is the broader market doing? Is this stock leading or following? Is this a temporary burst of excitement or the beginning of a substantial campaign? The answers separate the great trade from the average trade. And average trades are dangerous, not because they lose money, because they waste opportunity. There is a cost to every dollar tied up in a mediocre position. That dollar cannot be deployed into an exceptional one. Many traders never understand opportunity cost. They see only profits and losses. The successful operator sees something else. He sees capital as soldiers. Every dollar is a soldier in his army, and he sends those soldiers only into battles worth fighting. When your scanner produces 10 candidates, your task is not to trade 10 stocks. Your task is to eliminate 9. That is where discipline begins. Anyone can find reasons to buy. Very few can find reasons to wait. The greatest skill in speculation is not aggression. It is restraint. I know this sounds strange to modern traders. They are taught that success comes from taking more trades. The brokerage firms encourage it. The social media experts celebrate it. The market influencers display screenshots of dozens of positions, but I have never known a man to become wealthy through constant action. The truly great operators spent more time waiting than trading. They studied, they observed, they prepared. Then they struck when conditions aligned. Think about a hunter. He may spend days tracking his prey. Hours pass without action. Then comes a single moment. One shot, One opportunity, one decision. That decision produces the result. The stock market works the same way. Yet traders today fire at every rustling leaf in the forest. Then they wonder why they return home empty-handed. When 10 stocks appear on your scanner, begin by ranking them. Not emotionally, objectively. Which stock possesses the strongest relative strength? Which stock demonstrates the cleanest structure? Which stock shows the greatest volume confirmation? Which stock aligns with the overall market trend? Which stock offers the most favorable reward relative to risk? These questions force clarity. Clarity eliminates confusion, and confusion is expensive. I often hear traders say, "I couldn't decide, so I bought all of them." That statement reveals a lack of conviction. If you cannot identify your best idea, you have not completed your analysis. Buying everything is merely uncertainty disguised as diversification. There is another danger hidden among scanner results. Recency bias. A trader sees a stock similar to one that worked yesterday. Immediately, he assumes the same outcome will occur today. The human mind desperately searches for patterns. Sometimes those patterns are real, often they are illusions. The market exploits this weakness repeatedly. Yesterday's winner becomes today's trap. That is why every stock deserves independent evaluation. The market owes you nothing because a similar setup succeeded last week. Each trade must stand on its own merits. Each position must justify its existence. Each dollar invested must earn its place. The market is a ruthless employer. It demands evidence, not hope, not opinions, not predictions, evidence. I remember countless occasions when my watch list contained multiple attractive opportunities. The temptation was always present. What if this one runs? What if that one doubles? What if I miss the move? Fear of missing out existed long before anyone invented a name for it. And it has emptied more pockets than bear markets. You must understand something important. Missing a trade is not a loss. Taking a bad trade is a loss. Many traders behave as though every stock that moves without them represents money stolen from their account. That is nonsense. There will always be another opportunity. Always. The market has survived wars, depressions, booms, panics, crashes, and manias. Tomorrow, it will produce new opportunities. Next week, it will create more. Next year, it will generate thousands. You do not need every trade. You need the right trade. That realization changes everything. Once you stop chasing every opportunity, your vision sharpens. Noise disappears. Patience increases. Decision-making improves. You begin seeing the market as it is, rather than as you wish it to be. And that is when real progress begins, because trading success is not determined by how many stocks your scanner finds. It is determined by how many poor opportunities you reject. The amateur celebrates finding 10 stocks. The professional celebrates eliminating 9. One seeks action, the other seeks advantage. Only one of them survives long enough to build a fortune. And if you remember nothing else from today's lesson, remember this. When 10 stocks trigger your scanner, the market is not asking you to trade 10 stocks. The market is asking whether you possess the discipline to identify the one that deserves your attention. That single decision can mean the difference between being busy and being profitable. And the market has never paid anyone for being busy. Now let us go deeper. Suppose you have done the work. Your scanner produced 10 stocks. You ranked them. You eliminated the weak candidates. You narrowed the field to 3. This is where most traders make their next mistake. They begin looking for reasons to trade all 3. The professional looks for reasons to trade only 1. There is a subtle difference between a good stock and the best stock. That difference is where fortunes are made. The market pays extraordinary rewards only to extraordinary opportunities. Average opportunities produce average results, and average results rarely change a man's life. When I examined potential trades, I was never searching for a stock that could move. Almost every stock can move. I was searching for the stock most likely to continue moving. There is a tremendous distinction there. Many traders become fascinated with prediction. I became fascinated with probability. Prediction attempts to guess the future. Probability attempts to align with the most favorable odds. The first is gambling. The second is speculation. When you narrow your list from 10 stocks to 3, ask yourself a simple question. If I could only trade one of these positions with my entire reputation on the line, which one would I choose? That question changes everything. Suddenly, the mediocre setups lose their appeal. The questionable volume becomes obvious. The weak relative strength stands out. The uncertainty becomes impossible to ignore. You begin seeing what was always there. Most traders suffer from what I call opportunity intoxication. The mere existence of opportunity excites them. Their scanner shows movement, and their emotions immediately begin calculating profits. They are already spending money they have not yet earned. Their judgment becomes clouded. They stop evaluating. They start fantasizing. The market is particularly dangerous when it appears easy. When several stocks are moving simultaneously, traders often believe success is inevitable. That belief creates carelessness. Carelessness creates losses. I learned long ago that the best trade often feels surprisingly obvious after proper analysis. Not because it is easy, because all competing alternatives gradually eliminate themselves. The strongest stock leaves clues. It separates from the crowd. It attracts unusual demand. It resists market weakness. It recovers faster after pullbacks. It behaves differently. Most traders see 10 moving stocks. Experienced operators see 1 leader and 9 followers. The challenge is identifying which is which. Leadership matters more than people realize. The strongest stocks tend to become stronger. The weakest tend to become weaker. Human nature causes traders to search for bargains. They want discounted stocks, cheap stocks, overlooked stocks. But the market often rewards strength rather than cheapness. A stock making new highs may appear expensive, yet it can become even more expensive. A stock making new lows may appear cheap, yet it can become cheaper. The tape taught me this lesson repeatedly. Strength deserves respect. Weakness deserves caution. One of the greatest advantages a trader can develop is the ability to recognize true leadership. When 10 stocks trigger your scanner, identify the one setting the pace, the one attracting institutions, the one controlling the narrative, the one forcing everyone else to pay attention. That is usually where the largest opportunity exists. But selecting the right stock is only half the battle. The second half involves position sizing. This is where many promising traders destroy themselves. They correctly identify the strongest stock. Then they risk too much, or too little. Both are costly mistakes. The purpose of risk management is not merely to prevent losses. It is to preserve your ability to participate tomorrow. Every trader eventually encounters uncertainty. Every trader eventually encounters mistakes. Every trader eventually encounters losses. These experiences are unavoidable. The question is whether you survive them. I have seen talented men ruined, not because they lacked intelligence, but because they lacked discipline. A single oversized position erased years of progress. One emotional decision destroyed months of careful work. The market can forgive many mistakes. It rarely forgives recklessness. When you choose your one stock, determine your risk before determining your reward. Most traders reverse the process. They dream about profits first, losses second. Professionals do the opposite. They define danger before opportunity. They ask, what happens if I am wrong? That question protects capital. Capital protection protects longevity. Longevity creates fortunes. The public loves stories about massive winners. They admire the spectacular gains. They celebrate extraordinary returns. What they rarely see are the countless small losses that preceded them. Successful speculation is not about being right all the time. It is about making sure your winners matter more than your losers. That principle sounds simple, yet very few traders truly embrace it. Their ego demands accuracy. The market demands discipline, and discipline always wins. There were times when I entered positions and almost immediately realized the market disagreed with me. The stock failed to behave as expected. The volume disappeared. The momentum weakened. The character changed. Many traders would argue. They would hope. They would pray. I learned to listen. The market's opinion matters more than mine. Always. A trader who cannot admit error quickly becomes a long-term investor in a bad position. Nothing destroys accounts faster. That is why your chosen stock must continue proving itself after entry. Selection is important. Validation is essential. The market should confirm your thesis, not merely tolerate it, and if confirmation never arrives, leave. There is no shame in a small loss. The shame lies in refusing to take it. Now, let us return to our original scenario. 10 stocks triggered the scanner. 1 stock received the trade. The others were ignored. Days later, perhaps several of those ignored stocks also moved higher. This is where another psychological trap appears. Regret. The trader begins calculating hypothetical profits. If only I had bought this one too. If only I had taken all 3. If only I had increased my size. These thoughts are poison. They focus on outcomes rather than decisions. Trading is a game of decision quality, not outcome quality. A good decision can produce a bad outcome. A bad decision can produce a good outcome. Judge yourself by the process, never by a single result. The trader who follows a disciplined process repeatedly will eventually prosper. The trader who chases outcomes eventually self-destructs. I cannot emphasize this enough. The goal is not to catch every move. The goal is to consistently position yourself in front of the highest probability opportunities. That is all. Nothing more, nothing less. The market is an endless parade of temptation. Every day presents new possibilities, new rumors, new stories, new opportunities. The trader who attempts to capture them all captures none. The trader who waits patiently for the best captures the most. This principle extends beyond stock selection. It applies to every aspect of speculation. Patience before entry, patience during the trade, patience while waiting for confirmation, patience while waiting for the next opportunity. The market rewards patience far more generously than intelligence. Many brilliant men have failed because they could not wait. Many ordinary men have succeeded because they could. If there is one lesson I wish every modern trader understood, it is this. Your scanner's purpose is not to tell you what to buy. Its purpose is to tell you where to look. The real work begins afterward. The scanner identifies candidates. You identify opportunity. The scanner provides information. You provide judgment. The scanner finds 10 stocks. You choose one. That choice determines everything. Because wealth is not created by owning the most stocks. It is created by concentrating your efforts where the odds are most favorable. The crowd seeks quantity. The professional seeks quality. The crowd celebrates action. The professional celebrates precision. The crowd wants more trades. The professional wants better trades. And over time, those differences compound into entirely different futures. So the next time your scanner lights up with 10 exciting stocks, resist the urge to become a collector of symbols. Become a selector of opportunity. Study them carefully. Rank them honestly. Question them relentlessly. Eliminate them ruthlessly. Then place your capital behind the one that stands above the rest. Not because it guarantees success. Nothing in this business guarantees success, but because disciplined selection is the closest thing speculation has to an edge. And remember this, the biggest money is rarely made from finding more stocks. The biggest money is made from identifying the right stock, sizing it properly, managing risk intelligently, and having the patience to let the market prove you right. 10 stocks triggered the scanner. Only one deserved the trade. The moment you understand why, You begin thinking like an operator rather than a gambler, and that is where fortunes begin.